Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and global economics. I'm your host, Lewis, and I'm excited to have you join us today as we explore the latest developments that are shaping the financial landscape. We're starting off with a story that's been making waves in the investment community. The US-China trade war has been a major point of concern for investors, and recent news suggests that tensions between the two nations may be easing. However, this doesn't necessarily mean that the road ahead will be smooth sailing. According to reports, corporate profits at S&P 500 companies are expected to increase by 5.8% year-on-year, which is a marked slowdown from the first quarter's near 14% rate. In Europe, Stoxx 600 earnings are expected to fall by 0.2%, after last quarter's 2.2% growth. These numbers suggest that the trade war is taking a toll on corporate profits, and investors are becoming increasingly cautious. Meanwhile, in the UK, inflation remains a concern, with CPI numbers due out this week expected to show sticky price pressures. The British consumer has been absorbing higher prices, but real wage growth is slowing, and the tax burden is at its highest level since the 1940s. We're also keeping an eye on China, where GDP figures are due out soon. The economy is still growing above the government's soft target of 5%-ish. But retail sales numbers have been disappointing, suggesting that consumers are saving instead of spending. And finally, G20 finance ministers and central bankers are gathering in Durban this week to discuss some of the biggest challenges facing the global economy. From debt relief to climate finance, there are plenty of issues on the table, but it remains to be seen whether the group can make meaningful progress. As we navigate these complex and interconnected issues, one thing is clear: investors need to stay informed and adapt quickly to changing circumstances. We'll be exploring these topics in more depth throughout the show, so be sure to stick with us. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of cryptocurrency and regulatory updates. Today, we're discussing a significant development that's been making waves in the crypto community. The House of Representatives is set to pass a series of crypto-related bills next week, including the Genius Act, which aims to establish a regulatory framework for stablecoins. Now, stablecoins are a type of cryptocurrency designed to maintain a constant value, usually pegged to the US dollar. They're commonly used by crypto traders to move funds between tokens, and their use has grown rapidly in recent years. The proposed bill would require token issuers to back their coins with liquid assets, such as US dollars and short-term treasury bills, and to publicly disclose the composition of their reserves on a monthly basis. Proponents of the bill argue that these rules could legitimize stablecoins, making them more appealing to banks, retailers, and consumers. On the other hand, some critics are raising red flags, warning that the hype may be outpacing reality. They argue that the regulatory backdrop is supporting prices, but the risk of a fall in price or short-term pullback still exists. It's also worth noting that the Trump administration has faced criticism over potential conflicts of interest regarding the president's family crypto ventures. Democratic Senator Elizabeth Warren has expressed concerns that the proposed regulations may be too lenient and could put consumers and retail investors at risk. As we navigate this complex and rapidly evolving landscape, it's essential to consider multiple perspectives and weigh the potential risks and benefits. The total market value of the crypto sector has swelled to around $3.67 trillion, according to data from CoinMarketCap. While some analysts are optimistic about Bitcoin's role in portfolios, others are urging caution and encouraging investors to pause and assess their time horizons before jumping in. As we continue to monitor these developments, it's clear that the crypto market is becoming increasingly intertwined with traditional finance. Whether you're a seasoned investor or just starting to explore the world of cryptocurrency, it's crucial to stay informed and adapt to the changing regulatory environment. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic discussion so far, covering various aspects of risk management and investment strategies. As we wrap up today's episode, let's take a look at some current market news that caught my attention. We have two interesting stories to share with you. The first one discusses the Indian market outlook, highlighting the challenges faced by the economy, including slow private consumption growth and earnings upgrades. According to experts, the market is expected to remain volatile due to various factors, such as global economic trends, monetary policy decisions, and geopolitical events. It's essential for investors to stay informed and adapt their strategies to navigate these uncertainties. On a related note, Reliance Infrastructure has announced plans to raise long-term capital through equity shares, equity-linked securities, and non-convertible debentures. This fundraising initiative aims to strengthen the company's financial position and support its growth plans. The move is significant, especially considering the company's recent credit rating upgrade by India Ratings and Research. As always, it's crucial for investors to carefully evaluate the terms and conditions of such fundraising efforts before making any investment decisions. As we conclude today's episode, I want to emphasize the importance of staying vigilant and informed in today's fast-paced market environment. It's essential to assess the risks and opportunities associated with various investment options and make decisions that align with your financial goals and risk tolerance. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.